Recording it. We have what we call a fair value gap. Fair value gap. We have what we call a fair value gap, or sometimes we can call it an FVG. That's the shortcut, and most of us we know it being named an imbalance or imbalances. And these ones they play a very crucial role in our trading. Why? Because they give us the best entries possible. So without wasting much time into trying to dissect it, we must know about it first. So as we both know, we have what you call healthy price action and unhealthy price action. And if you don't know about that, you're about to know it. When your trade is moving in a healthy manner, we need to have a balance between buyers and sellers. The market always has to balance between sellers and buyers. Right. So we get to a point whereby we say our price is not moving healthy or there is no balance between buyers and sellers. And when that happens, the market usually leaves us with gaps, right? So in this instance, I'm gonna show you how you can actually spot a gap in the market. And I'll also explain the reason why those gaps exist. But for now, we want to start by spotting how that gap looks like. So let's say you have your candle number one, and you have a candle number two, and you have a candle number three, right? Going in your bullish direction. What you'd want to do is you want to check the tail. I want you to listen at this, guys. You want to check the tail of your candlestick number one, right? And the tail of your candlestick number three, right? These are what we use to identify gaps in the market. This is the most simplest way that we can use to identify gaps in the market, right? And at some point, our candlestick number two is going to become our candlestick number one. Our candlestick number three is going to become our candlestick number two. And this unnamed one is going to become our candlestick number three. Right? But before we go there, this tail from candle number one must merge with this tail from candle number three. Meaning, if we draw a straight line, right? Let me look for a two. Or let me just try to use my mouse to draw a straight line. You know how hard it is to draw a straight line using a PC, right? So if we draw a straight line, these two guys should merge, meaning that here and here we have merged, right? So there is no gap within the market. And let's say we keep on moving with price and we find out that we have candlestick number two now becomes our candlestick number one because we're done with this one, right? That becomes number one and our three becomes number two, meaning that our candlestick number three, our new number three candlestick, its tail must merge with the tail from candlestick number two, right? Meaning that if we draw a straight line, they should merge, right? If they don't now and they leave us like this, if we draw a box around this area, what are you going to see? You're going to see that if we touch this tail and this tail over here, you're going to see that we are left with a gap in between. Now, this is what we call a fair value gap or an imbalance in forex trading, meaning that price was not fairly distributed at this region. right? Means that at this region, price was unfairly distributed. So if we had that, right, what does it mean? It means even if price goes up, even if our price goes up, it still has to come, fill that gap, and then either go back up or fill that gap and then either go back down, depending on the scenarios and how our market structure will be working like. I'm hoping you're understanding this. If you have any question as we proceed with the lesson, feel free to raise your hand. I'll unmute you and you ask. Right. So the same scenario happens if we're in a downtrend. So after this, I'm gonna go to the actual chart and I'll show you what I'm talking about. Right. So let's say we're in a downtrend, 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 you're trending down, downtrend, downtrend, we're trending down, right? What we need to see here is we need to see healthy price action. We need to see our tails merging, right? We need to see those tails merging. Like you can see here, our candlestick number one, two, and three. If we link that tail from candlestick number one and that of three, they're actually merging. But then if we get a point whereby our new candlestick number three, this one is our new number two, and this one is our new number one. If we get to a point whereby those candlesticks don't merge and they leave us with a gap like this, what does it mean? It means that even if price goes wherever it goes, it still has to come back up, fill that imbalance or that gap, and then either continue going down or going up, depending on our market structure. I'm hoping we're understanding this. So now let's go to the actual chart and let's see if what I'm talking about is real and if it exists. So let me open my trading view. Okay. Let me share my trading view in just a minute, or let me just use this one from the web because the other one is not really performing well. I don't know what's happening with it. So now I'm sharing my screen so that we can all see what I'm talking about. Right. So I'm assuming we can. Which screen am I sharing now? Let me check which screen I'm sharing. Okay, this one. So I'm assuming we can all see my screen. Now I want you to look at this. This is our V25, right? And if we are to spot a gap, what you can see is there is a gap between this point and this point here. And I would like you to see it. Let me mark it in a way that we can all be able to identify it. Right. If we look at this tail, it's not merging with this tail, meaning that we have a gap at this point, and we can mark that gap. Right. Now, before I go any further, what I want you to know is whenever we see these gaps, right, when we mark them, like this is an actual gap, let's say this is a gap that we've seen. What we would also want to do is on that gap, we want to mark at least 50% of that gap. Right. Why? Because when price comes back, at least it has to fill 50% of the gap, give us market structure, and then it falls down. Right. In any point of interest that you are going to approach, we always should approach it with market structure. And when we reacted it, we should also react it with market structure. I hope you're understanding there. Right. So when we noticed that we had a gap here, what do we need to do? We need to fill this gap. And I'll do it like this. If we mark 50% of that gap, I want you to see something. I want you to see something here. If we mark 50% of that gap, which is here, right, the first time price, the first time price attempted to come and fill, it never filled 50% of that gap. And what does that mean? That means price had to come again to that point at some point in time and fill it. What did it do? It sold, did whatever it did, and then it came here, and then it filled that gap. Now it's falling. But what I would want you to really see is when we approach that gap, what really happens in smaller time frames. Remember, this is a daily chart. So let's switch it to a smaller time frame, something like the 2 hour. Let's see what we see in the 2 hour. All right. Okay, let's go to the 1 hour. So what you can actually now start seeing in the 1 hour chart is, remember I said when you approach these areas, you need to approach them with your market structure, right? So what you see is we had this downtrend, uptrend, and then we had our change of character. It went down, broke our structure, and now it's selling. So our next step would be for this pair to go down. I hope you're understanding there. So basically, any way that you approach it, maybe you're going to a point of interest. You just need to approach it with your market structure. And whenever you start seeing a change of character and the break of structure, generally means that that trade is played out or that point is played out. And it's now time for you to get in that trade. Right. It's not even that hard. I'll show you other areas. So let's go to the 24-hour chart. I want you to see something about these gaps. Okay, so when we fail to fill that gap, you can actually see that we have another gap here. We have another gap here. I think we can all agree. If we can't agree, what I can do is I can do this and I'll show you this tail here. It failed to merge with this tail here, right? So what does it mean? It means that we were left with a gap, a fair value gap or an imbalance here. And what do we know about those imbalances? They have to get filled, right? And when price did whatever it did, it still came back to this area. And if we are to go back to a smaller time frame, let's say let's start with the 4 hour. What you can actually see is you had your break of structure where here this area, right? And then it went down. So it approached, giving you highs, lows, highs, lows, highs, lows, high, low, high, break of structure, and then now it fell down with that market structure as well. So whenever we approach a point of interest, we should approach it with market structure and use the rules of market structure. Change of character first, break of structure, and then everything follows. Right. So I'd want to show you something again. Let's go to the 24-hour chart. And I'll show you, I think I saw another gap. And where was that gap that I saw? Okay, there's a gap here. So what we can do is we can mark that gap and price quickly acted on it so that it gets closed. So let's go to the 1 hour. I want to show you something in this area there. What do you see? What you see is there was a bit of market structure that played here, or change of character there, break of market structure, and then it fell down. I hope it's making sense. I really hope it's making sense. I know, my voice is boring, but I hope what I'm saying is not boring and is not making sense. It's making sense, I mean. And if we like to look at it, we can even go to smaller time frames. If there is a gap here in the 2 hour, I think we can all see it. And if we are to mark that gap here, what did price do? Price came with that market structure, change of character, break of structure, fell down a bit, even though it went up because we were overall in a buy direction. All right, there's a hand that was raised. I've unmuted you. It's on the device is written Samsung. It's not writing the name, but I've unmuted you. You can ask what you want to ask. The person who's using a Samsung, is it the one who just raised his or her hand? You can ask. Okay, seems the person is quiet. Since the person is quiet.
Hello.
Okay, yeah, we can hear.
Hello.
You. Yeah, we can hear
Right.
you.
I wanted to ask change in market structure.
Okay.
I'm not getting it. Can I actually change in market structure? What do you mean?
All right. Did you do market structure with us? Like, did you go through market structure?
No, like I'm new.
Oh, then that becomes a problem. On our first day of the course, we did market structure, how to know where the market is going. Like generally, in a nutshell, I'll try to explain this in under 2 minutes. If you are in an uptrend, you expect to see highs and lows, highs and lows, highs and lows, uptrending like this. What you don't expect to see is lows going below these newly made lows. So each and every low that we are going to have, it has to be above the previous low, and each and every high that we are going to have is to be broken by a newly made low, just like this. So when you find yourself in a situation where now you come and you break a previous low, it means that low is weak, generally meaning that you are now changing market direction and you're expecting to get highs and lows in this manner, highs and lows in this manner, highs and lows in this manner. And the way we can put it on an actual chart is if you want to check here using that same thing that I'm telling you, we have we have highs and lows, highs and lows, highs and lows, highs and lows. If you really check, this newly made law never came out to take out this law. This newly made law here never came to take this law. And this newly made law here never came to take this law. This newly made law here never came to take this law, meaning that each and every new law that's being made is trending above the previous law. So in that way, we can know that the market is buying. But if we find ourselves in a situation like, you see, this is the most recent law that was made. If it gets broken now and we make a new law below it, it now means that we are now changing market structure. And as we are expecting here, we've reacted at the 50%. So we're expecting a new low, a new high, a new low, a new high, a new low, a new high in the opposite direction, switching from bullish to bearish. I don't know if that made sense.
I You explained it very well. Thank you so much.
Okay, you're welcome. So now, let's go back to the 24-hour chart so that I show you what you need to know, guys. All right. So now we'll have instances like this. Let's say you now see that your fair value gaps, we can all see that all our upper fair value gaps they've been taken, and the reason being, if we were focusing on market structure from the previous trend, you'd see that we had broken structure at this area over here. Now, so there was a fair value gap here, meaning that there was an imbalance of orders here, which the market needs to come back and take before it goes down. I hope that makes sense. So now, when we find ourselves in a downtrend in this situation, all we are now trying to do is remember we also have fair value gaps at these areas. We now need to come and fill these gaps. This is a gap. I think we can all see it. We also have another gap here. This is a gap. I think we can all see it. Right. So these are areas that needs to be filled. So most probably what price will do is as long as we get a confirmation to come fill this order, to come fill this gap as well, and then maybe play around and then continue doing whatever it does. If it leaves gaps at these areas, it will still come back, take those gaps, and then continue. So that's how we use our fair value gaps. So let's choose a different pair. Someone might ask, um, why are you using that pair only? Um, say the set that I was talking to, can you just give me any pair of your choice that you want me to look at? Can you give me any pair of your choice? Any pair of your choice. Usually when I'm doing these sessions, I don't prepare in advance because I believe the market always has opportunities and each and every pair it reacts the same. All right, so I've got a hand. I will ask you to unmute HP. Okay, I've unmuted you.
Hello.
Yeah, we can hear you.
Okay. So I saw that the guy was not responding, so I was just thinking if you can go to maybe V75 or if you trade currencies, you can go to any chart of currencies.
Just tell me what pay you want me to open. Don't worry.
All right, just
And
V75.
just V75. All right.
Yeah.
Okay. So now we've opened our V75, and what we are going to see is, let's do this. We want to look for gaps, right? Gaps that were filled and gaps that are not yet filled. So first thing first, if you check here, let me go back. Let me go to my 4 hour. Another trick is, sorry, actually it's not a trick, but it's the reality of things. What you need to do is you need to look for your gaps in larger time frames. Because if you look for them in smaller time frames, they will always disappoint you. Right. I'm seeing here, like just now, there's this point where there's a gap and price is just reacted to it. On V75, this is on the 4 hour chart, right? And if we come and mark 50% of that, you can see that it has been fully filled. And there is another gap that we see here. there's a gap that we see here. We never even attempted to fill it. I'll tell you why I'm marking these points. And then there's another gap where, okay, at the bottom here, now we can't see any gap, is it? Right. So this means coming from the bottom here, going up all along up until this point, we had healthy price action. So if price is to come back down, or if it's to correct coming back down before it moves up, it has really no reason to come like down here. Why? Because all orders were filled, all orders are healthy here. Rather, when you started seeing this gap, you can actually start seeing some more gaps, some small gaps. Right here, you can see a gap. Here, you can see a gap as well. This one was attempted to be filled and it was never filled. So now, using the rules of market structure, let's say we want to zoom this out. What we can generally tell is we were downtrending, right? And no lies, we were downtrending all along. So what you see is at this point with a high, a low, a high, a low, a high, a break of market structure at this point. So which highs are we now targeting here at this point? So price can just choose to fill this gap, come fill this one, start giving us our structural highs, going up, breaking them, going up, breaking them, going up, breaking them. So if if we fail or we show signs that we failed to break this high straight away like now, and we see a break in market structure at this point, now means that it wants to sell, and most probably where that sale is going to end is at this point, which is where our main gap is. And if you check, we also have a demand zone there, and then it goes up. We've never really learned much about supply and demand, which I believe we will. But basically, just because we have an imbalance here, it justifies why price should come down there to few orders before it goes up. Now, I want to tell you something that might actually help you as well. I don't believe in certain terms in Forex or trying to know deep things, but some things, if you like sit down on your own and then you start thinking about them, they will start making sense, right? So before I start talking about them, let me just check if we have a change of character or anything in our M15. In our M15 already, you can see that at this gap, we already have our change of character right here at this point. We can all see that. So the next thing we need to see is our breakout structure here. And then now we know that in our M15, we are now selling. So at the end of the day, it's not just about saying, I've gotten into my fair value gap, so I'm not selling. Wait for market structure to play out. Once you get your change of character and your breakout structure, then you can actually sell with confidence, right? Sometimes I always tell this to my students, it's better to lose a trade with a proper setup than to lose a trade with no proper setup, right? So, like what I wanted to say, we have what you call institutionally funded candles, right? Or the same concept of order blocks apply. Let's say someone has injected 5 million so that we see a candle. I want to show you something here. So let's put a red color. So let's say an institution has put 5 million on a trade to sell right? But the actual mindset is for them to buy. What they'll do is they'll put 5 million here and just right straight away, they'll put maybe 20 million there. So what do you think is going to happen? There's going to be an imbalance of sellers and buyers, right? And obviously the next candle that's gonna open is gonna be like this. And then the next one is gonna be like this. Meaning that here they have left a gap right in these areas. They have left a gap. So they really need to come back to that gap and fill it before they really go up. I think I explained this in the theory of order blocks. I think it was today, yeah, in the morning, I did explain about it. So it's something that you can go and look at and listen to again. So this is why these gaps really exist in the market. And at some point we have to come, fill them, and then we go up. Why? Because there has to be a balance of buyers and sellers in the market. All right, there was someone who was raising his hand that I cut off. Samuel Ryan, all right. I am asking you to unmute and then you can ask. I've unmuted you, you can ask. I've unmuted you, Samuel Ryan. I'm not getting any response or feedback from you. It's fine. So I'll ask Tifa to ask.
Hello, it's unmuted now.
All right. Okay, we are listening.
Um, I I have a request. On some of your examples, is it possible for you to maybe uh like mark out exactly the change of character, the breakout structure, and maybe an example of an entry with stop loss and TP.
All right, that's fine. I think I'll do that. Greatly appreciated.
Hello?
Uh, yeah, I can hear you. I'm saying that's fine. I think I'll do that from now onwards. Can you hear me?
Yes, I heard. Thank you. I said that's all I wanted to ask.
All right, that's fine. I think I'll do that from now onwards. It's fine, no problem. I'll do that and then give you an actual entry. Okay, so we have Tifa. Tifa, can you hear us? Okay, if you can't, I'll ask Harry to speak. I'll ask Harry to speak. I've asked you to unmute, Harry.
Okay, thanks. I wanted to ask, what I'm now seeing is on the value gaps, it's usually we have problems in determining the TP. Can we now safely say TP can be determined by fair value gaps, or you can aim P at a fair value gap?
I got your first question, but I think the last four words you said I never got them clearly. Hello?
Okay, I was saying what I'm seeing, usually we have problems in determining TP.
Okay.
Sometimes we can't really determine where to put P, but what I'm now seeing here is that we can actually use our fair value gap as our TP. Can
Yes,
we safely say so?
yes, we can say that. We can safely say so.
Thank you so much.
All right. Okay, so here's the thing. Um, what happens now is, let's say, I'll give you an example like this one. Let's say, I know some things may be complex at some time. let's say we are in an uptrend, right? And let's say we had a fair value gap at this point, and then we have another fair value gap at this point. What we can do is, since we know that we failed to break this high, but decided to respect this fair value gap, and we actually see that there's a fair value gap, let's say at this point, failure to break this high means that this flow is going to be hunted, right? It means this flow is weak. So if there is a gap below that weak, if there is a gap below that weak low, what you actually see is price will come, then fill that gap and then come back up. Now, determined by market structure, it will either break and go up or respect another fair value gap here and totally switch in a down.